After the Zomato IPO, there is again a new IPO in the market. It is really raining IPOs in India. One of the major reasons is the bullish trend in the market and everyone is looking to encash this opportunity. The new IPO in the market is from Tatva Chintan Pharma Chem Limited. The IPO date is between 16 July to 20th July. Now, what is this company and is it worth applying for the IPO? We will analyze in this video. Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. In this video, we will cover Tatva Chintan company profile, its product portfolio, promoters, key strength, competitors, key risk, future growth prospect and the financials. Then we will cover the IPO details along with valuation to decide if it is worth applying for the IPO or not. But before we proceed, if you are following my stock fundamental series, I recently created a video on Newgen software that jumped almost 38% within the next 10 days. But then there was a slight fall of around 4 to 5%. Now, I saw a few comments from people saying that we entered at high level and now it is falling. What should we do? Likewise, there were a few comments on the Apple video after the recent fall. This is one of the biggest reasons why retail investors lose money in the stock market. First of all, they invest based on tips. My videos are only to help you understand the business, but many people blindly invest based on my videos without understanding the fundamentals. And when there is a slight correction, they panic. They can't handle 5 to 10% of loss. This is the reason I have curated a complete course on money management so that you also understand how to do the fundamental analysis of a company rather than simply buying or selling stocks based on tips. And when you know how to analyze a company, you get that conviction to invest and stay invested even during the fall. So learn about money management before you invest your money so that you don't have to depend upon others. Alright, now let's get started with the IPO analysis. Incorporated in 1996, Tatva Chintan is a specialty chemical manufacturing company engaged in the manufacturing of structure directing agent, phase transfer catalyst, electrolyte salts for supercapacitor batteries used in automobile batteries and pharmaceutical and agrochemical intermediates and other specialty chemical. So basically, as a manufacturer of specialty chemical, company's product form a key ingredient in various manufacturing and industrial process. For example, its SDA and PTC products have various applications in green chemistry. And there's a growing focus on green and sustainable technologies. Tatva Chintan is the largest and the only commercial manufacturer of SDAs for zeolites in India. It also enjoys the second largest position globally. So zeolite is basically used as catalyst and absorbent. For example, zeolite promoted with transition metals such as copper and iron are considered as one of the preferred technology for emission control in automotive application. In addition, it is one of the leading global producer of an entire range of PTCs in India and one of the key producers across the globe. Moreover, Tatva Chintan is the largest producer of electrolyte salts for supercapacitor batteries in India. Its product find applications in various industries including the automotive, petroleum, pharma, agrochemical, paints and coating, dyes and pigment, personal care and flavor and fragrance industries. Its products are exported to over 25 countries including USA, China, Germany, Japan, South Africa and the UK. Company has two subsidiaries, one in USA with name Tatva Chintan USA and another is in Europe with name Tatva Chintan Europe BV. Currently, it has two manufacturing facilities in Ankleshwar and Dahej in Gujarat. Company is promoted by Chintan Shah, Ajay Patel and Shekhar Somani, who each have an experience of over 24 years in the specialty chemical manufacturing industry and have established strong business relationship with domestic as well as overseas customers. Some of the customers of Tatva Chintan include Merck, Bayer AG, Asian Paints, Laurus Lab, SRF Limited, Naveen Fluorine, Oriental Aromatic, Atul Limited, Megmoney Organics, Divis Lab, Hawks Chemical, etc. If you look at the key strength, its first strength is leading manufacturer of SDA and PTC. With very few players in the Indian and global market, Tatva Chintan is the largest and the only commercial manufacturer of SDAs for zeolites in India. It also enjoys the second largest position globally. It is one of the leading global producer of an entire range of PTCs in India and one of the key producers across the globe. Second strength is global presence across various industries having high entry barriers. Company products are supplied to over 25 countries and exports contributed around 70% in total revenue in FY20. Company has strong relationship with some of the top customers including Merck, Bayer AG, Asian Paints, Laurus Lab, SRF Limited, Naveen Fluorine, Atul Limited, Divis Lab, etc. Due to the involvement of complex chemistries in the manufacturing of products and complex production process requiring high level of technical knowledge and R&D capabilities, the specialty chemical industry has a high entry barrier for new entrants. Its third strength is modern manufacturing facility with a focus on green chemistry process. Company manufacturing facility in Ankleshwar and Dahej are close to Hazira port that optimize the import and export cost. Moreover, the manufacturing facility employs advanced technology that improves productivity and enable them to certify their products as ultra pure grade. Moreover, their products are focused towards green chemistry, that is based on the principle of clean chemistry, minimum waste and byproducts, zero liquid discharge and safe chemistry. Its fourth strength is experienced leadership. Company has a strong leadership with promoters Chintan Shah, Ajay Patel and Shekhar Somani, who each have an experience of over 24 years in the specialty chemical manufacturing industry. If we look at the competitors of Tatva Chintan, it includes Aarti Industries, Naveen Fluorine, Alkyne Amine, Vinati Organics and Fine Organics. If you look at the ROE of each company for FY21, Tatva Chintan has one of the highest ROE at 32.11%. So clearly in terms of profitability, company is looking solid as compared to the competitors. If you look at the key risk in near term, COVID can impact the business of the company. Then next risk factor is fluctuation in raw material prices. So raw material is the biggest cost driver for the company with around 55% of total cost. An increase in raw material would reduce the profitability of the company. Moreover, company depends upon limited numbers of suppliers for raw material. So loss of any supplier could impact the business of the company. Next risk is that company's manufacturing facility is concentrated only in Gujarat. Any issue in that area can impact company's business. Next risk is that the top 10 customers of Tatva Chintan contributes around 50% of total revenue. So any loss in top customer can impact the business of company. If you look at the future growth prospect, the global chemical market is valued at around 4,738 billion, with China accounting for major market share of around 37%. India account for around 3.5% market share in the global chemical market. The global chemical market is expected to grow at 6.2% CAGR, reaching to $6,400 billion by 2024. The Indian chemical market is valued at around 166 billion, with the specialty chemical accounting for almost 47%. It is expected to reach $280 to $300 billion in the next 5 years, with an anticipated growth of around 12% CAGR. If you look at the growth drivers, I have been saying that one of the biggest themes is China plus one. Global manufacturers want to reduce their dependency from China and hence they are looking for alternatives of China. India has emerged as a strong player due to factors like low-cost labor, strong experience in the chemical sector, etc. On top of that, Indian government has a strong focus on manufacturing sector to reduce dependency from China. Initiatives like Atmanirbhar Bharat and schemes like PLI scheme would benefit the overall manufacturing sector in India, as this would certainly increase the demand for chemical sector. Hence, the chemical sector in India is a long-term growth story and has just started. Moreover, there's an increasing global focus on sustainable green chemistry by reducing your residual waste, zero liquid discharge and safe chemistry. Tatva Chintan is planning to expand its product portfolio with eco-friendly and sustainable products across sectors and geography. Company is also planning to expand its R&D facility, which is the key in growth for the company. The R&D team has helped Tatva Chintan grow from 72 products in FY11 to 138 products in FY20. Company is also planning to expand its existing manufacturing facility, and that's where company is raising capital via IPO. We'll look at it in IPO details. If you look at the revenue, company's revenue have grown from 206 crore in March 18 to 306 crore by March 21. Its profits have grown from 20.5 crore in March 18 to 52.2 crore by March 21. That's more than double in just 2 years. So both revenue and profits have grown at a very good rate. If you look at the profitability, its return on net worth is 32%. In fact, both ROE and ROC are consistently above 20%. Its debt to equity is 0.58, which is well under control. Overall, financials are looking very solid. Tatva Chintan IPO window is between 16 to 20th July 21. The price band is 1073 to 1083 rupees. Face value is rupees 10. Market lot is 13 share. Issue size is of 500 crore, out of which 225 crore is fresh equity and 275 crore is offer for sale, where promoters are selling their stake. The money raised from the IPO would be used for funding capital expenditure requirement for expansion of Dahej manufacturing facility. Then funding the capital expenditure requirement for upgrading R&D facility in Vadodara and meet general corporate expenses. So basically, company is expanding its business and hence would use the money for expansion purpose. Now the most important part, that is valuation analysis. At a price band of 1083, Tatva Chintan would be around 2400 crore company. So it would be a small cap company. And the price to earning ratio of the company would be 46. Considering the fact that it is the fast growing small cap company, the valuations are looking alright. Not too high, not too low. In fact, if we compare it with other listed players, the majority of them have P ratio in the range of 60 to 70. In that way, Tatva Chintan valuation is lower than other listed players in chemical sector. If you look at the grey market premium, Tatva Chintan is currently commanding a grey market premium of 50 to 60%. So clearly there is a great response to this IPO and there are high chances of solid listing gain. So in this video, we analyzed the new IPO of Tatva Chintan. It is a specialty chemical company with applications in various industries including automotive, petroleum, pharma, agro, paint and coating, dyes and pigment, personal care, flavor and fragrance, etc. Company has an experienced leadership with 24 years of experience in chemical sector. It is involved in green chemistry with minimum waste. The future of chemical sector is looking very bright with themes like China Plus One and government focus on the manufacturing sector in India. The financials of company are looking solid. Overall, Tatva Chintan is a fundamentally strong company. The IPO price valuation is at a PE of 46, which is looking reasonable. Company has received a very good response in the grey market with around 50 to 60% premium. So this IPO is looking very promising both for short-term listing gain and long-term wealth creation. Personally, I would be applying for the IPO. Although I expect a very good response to this IPO and the allotment chances are bleak. But I will try my luck. What is your take on this IPO? Do let me know in the comments. I will see you with another video. Till then, take care.